Your $28 buys a dying windmill company with $50 in cash inside. The plant that Buffett bought threw in $50 of free cash. A market this wrong should bankrupt someone, yet the ledger paid. In 1961, one investor saw it and quietly bought control. You are about to see exactly what he saw on the page. The number that could not lie handed Buffett a $50 company. By the end, you will run it on any stock yourself, in 3 minutes on the back of an envelope. A method that Graham built after 1929 quietly avoids total ruin. And it once handed Warren Buffett a company for almost nothing. The company was Dempster Mill Manufacturing in Beatrice, Nebraska, a maker that a fading farm market left completely for dead. By 1961, sales collapsed and the factory bled cash monthly. Every idle month, more money died on the ledger. The bank watched the loans and the bank smelled default. Wall Street saw Dempster as a corpse, already broke. A maker that the world abandoned still hid $50 cash inside. Its best years had died 40 years earlier, so the stock crashed to almost nothing. Near $18, Buffett's partnership saw the ledger and started buying. The board that Buffett quietly seized cost him near $28 each. His average cost settled near $28 a share. Hold that $28 in mind and watch what happens next. A firm that Wall Street buried was secretly worth far above $28. Not someday, and right then on the cold ledger page, its cash and inventory minus every debt cleared $50. You could shut the doors that afternoon and not go broke. The parts that you could sell paid every creditor and left $50 and still walk away with $50 for each share. You paid $28. The liquidation alone returned $50. That gap is the whole game Graham taught. After 1929, the bargains that Graham hunted after 1929 trade below their cash. A net trades below the cash on its own ledger. The factory, the brand, the future, all counted at $0. Feel your pulse jump, because a wrong move here means ruin. Now watch the exact arithmetic worked on the page. The number Buffett computed before he risked $1. The number that Buffett wrote down first saved his $28 bet. 4 short steps, no advanced math, no crystal ball. Grab any balance sheet and follow the ledger with me. Step 1, find the current assets on the page. Current assets are what turns to cash before you go broke. Cash on hand, receivables owed, and inventory gathering dark dust. For Dempster, count the cash sitting in the bank account. The receivables that farmers still owed counted as $75 of assets. And the windmills created in a warehouse nobody visited. Those 3 lines were the firm's only spendable wealth. Say they totaled about $75 for every share. Step 2, subtract every debt that could bankrupt it, not just the short-term bills and every note, all of it. The debt that could foreclose gets subtracted before you ever buy. Graham says assume the worst, or the debt buries you. Or say those debts came to $25 per share. Subtract that $25 from the $75 in current assets. You are left with $50 of net current assets. That $50 is the floor that stops you going broke. Graham named it net current asset value per share. Notice what you never counted on that page. A factory that Graham ignored entirely was valued at exactly $0. The buildings, the trucks, the brand, all valued at $0. Graham treated those as a free gift on top. Step 3, divide by the shares for value per share. Here, the math already gave you $50 a share. That $50 is the cold floor under the whole business. Even a fire sale should hand that $50 back to you. Step 4, refuse to pay the full $50. Graham demanded a margin of safety or losses ruin you. The rule that Graham demanded, pay under 2/3 of $50 value. 2/3 of $50 is about $33 a share. Below $33, you buy $1 for 60 cents. Buffett paid $28. Well, under the $30 ceiling, he bought a $50 asset for 56 cents on the dollar. That cushion saves you from ruin the day you are wrong. A beginner that guesses wrong often enough gets wiped out completely. The margin of safety forgives your honest mistakes. That is the whole net method, and it prevents ruin. Add current assets, subtract all debt, divide, then discount. 4 steps you can run on any stock tonight. No forecast, no story, no guess that could blow up. Just what the firm owns minus what could bankrupt it. A liquidation value tallied on a nervous clerk's ledger. Graham built it after 1929, wiped him out cold. The optimism that Graham never let bankrupt him twice after 1929. So he trusted cash and goods, not a story that blows up. Cash on hand cannot lie the way earnings do. Inventory in a warehouse is real and countable on the page. That is why the $50 felt so safe to Buffett. He was not betting windmills would sell before ruin. The cash that Buffett bought at a steep discount sat below $28. The windmills were a free lottery ticket on top. If the door shut, the $50 math still paid him. But the math hides a trap that can still ruin you. A cheap net can still wipe out your money. Here is how the trap quietly springs shut on you. That $50 of value is not frozen behind glass. A business that quietly burns cash slides toward bankruptcy before you notice. Each bad quarter melts a little of your $50. Dempster bled that way while Buffett watched, near ruin. Unsold stock, wages leaving, the firm sliding to broke. The bank could foreclose and seize the whole plant. Then your $50 collapses towards $0 overnight. This is the value trap that ruins careless investors. The trap that quietly ruins careless investors turns $50 into worthless. The number was right the day you bought it, but a business leaks value like a cracked, dark bucket. Cheapness alone will not save a firm from bankruptcy, so a net is only step one of the job. You must stop the bleeding fast or go broke. Buffett owned Dempster, but Dempster kept bleeding money. The managers that could not stop the bleeding lost $50 slowly. So Buffett called his partner Charlie Munger for help. Munger knew a ruthless operator named Harry Bottle. In April 1962, Bottle took over a near-bankrupt firm. His one job turned dead assets back into cash. Harry Bottle attacked the bloated warehouse hard, an operator that cut inventory from $4 million to $1 million fast. Every unsold windmill became dollars in the bank. He closed the branches that bled money every year. He raised prices on parts no rival sold, filling the ledger. He fired staff the dying firm could not pay. Cold and hard, yes, but it stopped the fatal leak. The melting $50 stopped melting, then began to grow. Freed cash flowed up to Buffett to reinvest. The cash that Bottle freed flowed to Buffett near $3 million. The dying windmill maker became a cash machine, not by selling windmills to a broke, empty prairie, but by turning dead inventory into living capital. That is the second half of Graham's net craft. Buy the asset cheap, then release the trapped cash. Graham found the bargain. Harry Bottle stopped the ruin. One man does the math, the other stops the bleeding. The lesson that Buffett learned saved his entire $28 net bet. The number opens the door. Discipline saves the money. By 1963, Dempster was lean, solvent, and full of cash. The bleeding had stopped, and the vault was heavy. So Buffett did the last cold, correct thing. He sold the whole company before any crash could hit. The buyers paid about $80 for each share. Remember your cost, an average of just $28. $28 in, about $80 out on a firm once left for dead. Nearly 3 times the money on a dying windmill firm. The gain topped $2 million in cold cash. That $2 million funded everything the partnership did next. A gain that Dempster produced bought businesses that never went broke. A windmill nobody wanted paid for the empire after. That is what one cold number on a page can do. Not a hot tip, not a growth story that blows up. Just assets minus debts bought under 2/3 of value. So here is your Monday drill in 4 short lines. 1, add cash, receivables, and inventory into current assets. 2, subtract every debt or it will bankrupt you. 3, divide by shares for net current asset value. 4, buy only under 2/3 of that number. The cash that Harry Bottle unlocked must never be left to rot. Do that, and no crash can scare you into ruin. This was Graham's coldest tool, the one Buffett mastered. If it helped,